Good afternoon and welcome to our 42nd Global Connectivity Conference on Real Estate for CIPS only. Welcome you. We're going to take our first step to introduce our participant, and then I will do some presentation. So I'm going to start with Rory. Please introduce yourself.
All right, thank you, Tahir. I'm Rory Dubin. I've been a CIPS for almost 16 years. I'm in the Jacksonville, Florida, which is the greater Northeast Florida area. I'm actually board president this year, and I do both residential and commercial real estate.
Wonderful. Brett Brown, your turn to introduce yourself, please.
Yes, hi, Brett Brown, Naples, Florida. Have been an instructor for CIPS since 2009, and I've had my CIPS since 2007, and been very, very involved with global, pretty much everywhere. We are the Ambassador Association for Costa Rica, so I tend to the details for our local board for that.
Thank you, Brett. Barbara?
Barbara Ashley Jones. I'm in the Orlando area. I've been a CIPS probably for 20 years. I've been in the business for about 29 years. I'm very much involved with Global in Orlando, and I'm with Sotheby's International, and I do work in the Central Florida area.
Wonderful. Barbara, my name is Tahir Qureshi. I am a CIPS and own a city realty brokerage, a small boutique brokerage. I deal with residential, commercial, and also I'm a CIPS instructor, as well as instructor with the Real Estate Institute of Canada, and promoting good ethics and business practices, and your global partner in Toronto. So we're going to start our presentation today. I have put together a small presentation for home buying through down payment. If you are short of down payment and how it works, there is a equity sharing agreements required, and I'm going to explain that. So I'm going to share my screen. If during this presentation, if you have any question, please feel free to call. And okay, let me see 1 second. Go from here. I'm going to close this one and close this one, and I'm going to start the slideshow from here. So since this relates to financing, I'm a principal broker of Canada Express Mortgage. I have a license number 13241, my brokerage. Understanding down payment contribution and equity sharing agreements. This is a concept that I recently learned because we have many clients who are not able to use their leverage to get financing, and they don't. If by increasing the financing, they will have a difficulty in paying the payment. So we were thinking about what are the alternate solutions available to the public. So I come up with some shareholder, some company or lender or down payment contributor who are willing to provide funds, and you don't have to pay interest on those, but they will share the home equity with you. So this is, we're going to start now. First will be introduction, co-investing, application process, shared ownership, co-buy, share and contribution, sale of home calculation, disclosures, and HCA. It's a home equity sharing agreement. So I've made it short because a lot of slides for there. So in this presentation, you will learn alternative solution for your clients who have short of fund for down payments to fulfill. Most cases, when you are buying a home as a conventional mortgage, you will need about 20% down. Therefore, in Ontario, particularly in Canada, if you don't have a 25% down, 20% down payment, you need to go to CMHC to get insurance loan to value is lower than 20%. So in this case, this equity sharing program, which I discovered is a private funding, they will be, when your clients are facing challenges, then they need financing, but not available through conventional lender, they can approach the lender through this presentation that I'm going to present to you. Is a private source for funding. So it's called co-investing. There are private investment firms that co-invest up to $250,000 to help you achieve a 20% down payment to secure a conventional mortgage. Because if you have 10%, you can borrow 10%. If you have 5%, you can borrow 15%. And since you are co-buying a home with a co-investing for a partner, there will be no monthly interest payment is required. Since it is a co-investing, the equity share agreement is created. That means you are not paying any interest during the term. Mostly terms are probably 10 years. You can terminate. There is no penalty for this kind of agreement. So the co-investor may contribute 5 to 15% of the purchase value of a home when you are buying a home. There are two concepts. One is equity sharing, and one is co-investing, means they are buying with you. So now, what is the application process? Mostly mortgage agent and broker, they become a referral partner with these firms. So you have to explore in your area if there are any firms who are offering such services. And you can also, you go online and you apply for that. So once an application is submitted online and is approved, the funds will go through your lawyer. In Ontario, closing is done through the lawyer. So all funds from you or from the co-owner or co-sharing partner, investment partner, will give you the funds to your lawyer. And then obviously you will get a conventional mortgage for balance of the 80%. We're going to show some calculation as well. So an equity sharing agreement is finalized between the parties because they're not charging interest. They're giving you the money and they're going to say, okay, we'll share the equity and we'll take the risk with you. Not only that you make a profit out of it, but you also share the loss if this happens. Our Canadian Mortgage Housing Corporation, it was a federal corporation, was doing this program. Maybe they were overwhelmed with the program. So one of the lender, I'm not going to name it here, but those are who went ahead and make some arrangement that we will provide the funding. So there is a lot of capital company involved behind those people who are doing it. So let me move this screen here. So home buyer will buy the house. They enjoy ownership and responsible to carry on all activities, mortgage payment, which is a conventional mortgage, any maintenance, property taxes, insurance, and everything. So it's called shared ownership. When you go buy a home with the percentage of the down payment that each party contribute into the percentage of equity they have in the home. So there is a calculation how much you are putting as a homeowner or your client is putting it and how much they're going to put it. So this determines how the home appreciation is shared when it is sold. So first of all, there is no down payment and there is no interest payment on a monthly basis. You got a down payment from a co-buyer. He's basically buying the property with you to buy the house, and they're sharing the end result future value of your house when you sell it. And they can go up to 25 to 30 years. You don't have to pay. And the calculation will be based on the resale value at that time. You don't have to calculate now, but it will be calculated when it's sold. So I'm going to show you the share. So if your buyer contribute 40% of down payment, and they will be and your partner in this co-partner will be 60%. And this is how the increased value of your property or appreciated value of the property will be shared with them. The money that co-buy invest into buyer's home is not a loan. Both are buying a share in the future value of your home. So the future value is the risk that both parties are doing it. And that's why there is no interest or monthly payment. So you are not paying extra money for the share that you obtain. Now, I'm going to give you an example of that. For example, a co-buy share and contribution. You are buying a purchase a home for $1 million. The buyer contribution is $80,000, which is 8%, and buyer co-buying contribution $120,000, which is 12% of the $200,000. Okay, so now you can see the buyer has to arrange a mortgage for 80%. What it did is because it avoided the CMHC loan to value insured policy, because they have to go upfront. Sometimes they charge 3.75% upfront when you are below 20%. So in this case, the ownership share equity is split between 40 and 60%. It's based on the amount divided by the down payment. And that is where the 40% and 60% showing up. So you are saying 120 over 200,000 or 80,000 over 200,000 and give you the share of your contribution. Now, I'm going to make this a little bit higher. Okay, maybe I shorten this one. Now, you can see that now proceed from a sale. So you have a 10-year terms, for example, and you are now selling the home. The time, so let's say the future value of sold property is 1.5. You bought it for 1 million. It sold 1.5. There is a remaining mortgage, because remember they started 800,000. 10 years they paid out 100,000. So net proceed is 800,000, and less return on principal. So when a home buyer pays payment toward the mortgage, there is a share of principal that is being paid. So that is credited to the home buyer. So net appreciation will be 700,000. So now you multiply a 40% factor with 280,000. You come up with of 700,000, and you also need to return the mortgage principal that you took from them. So you will be giving a total receipt by the home buyer, 380,000. Now, 60% is split because of co-buying. His share is 60% as compared to 40% by the home buyer, and there is no other cost involved. So they are strictly based on sharing, whereas equity sharing, another vendor is doing a different way. I will explain that. So all closing costs are be paid by the home buyer. So basically, how much they pay down payment is the equity split that is between the home buyer and this. Therefore, at this time, the buyer will get 380,000. They invested only 80,000 in the beginning, but their share of equity split was in 10 years was 280,000. So the overall they get 380,000, and the balance payment goes to the share person who's putting the money down. So most important thing for us as being a broker, or whether you're a mortgage broker or real estate broker, is to disclose home buyer the finder fees or benefit that you will receive before making any referral. These companies will not want you to get involved with the process. They're confidential. I tried to reach out to get a copy of the agreement. They said, no, we don't we only give you referral. So we, as a due diligence, as a licensed practitioner, we have to make sure that they are legitimate, they're functioning. And in Canada, according to this group that I have associated, there is no requirement for them to get a license, even though Canada Express Mortgage, my brokerage, is licensed with FISRA. That's the regulator. Now, disclose any conflict of interest. In case you are investing money with this group, you have to disclose to your buyer and furnish acknowledged copy to the home buyer, because that's a requirement, and then also furnish a copy to your brokerage for record. This is very important disclosure. Conflict of interest, finder fee, or any benefit. Sometimes they can give you a free trip to Florida, but you have to disclose that. This is a regulatory requirement for us. Now, this is, we're going to talk about the home equity sharing. This is another way of doing it. First was about securing down payment to avoid high risk insurance or loan to value insurance that's offered by CMHC, Canadian Mortgage and Housing Corporation. So you avoided that. That could cost you $35,000, $40,000. So you avoided that by going through that agreement. In fact, you can end up sharing the equity that you can appreciate. Now, equity sharing is different. This is another concept. When you are not able to secure funds from conventional mortgage or financing, you can reshape your home equity to meet your needs. Why we need them? Sometimes we have older home, we do home renovation. Sometimes we have to diversify as a senior person, our wealth. Sometimes we do funding our retirement, and sometimes you have give a living inheritance. You want to give it away to money to the kids, and everything you want to borrow, take the money from your equity, or pay off your debts. Sometimes we accumulate debts and we want to pay off that. So, or start a business. So just about anything, provided you have a minimum. Condition is that you must have a clear 25% equity in the house. That is you can get any financing under equity. Obviously, it has to be approved. You have to apply online, answer some questions. So we're going to go through that. So here is a few questions. They will look. You must own your home. That's the criteria. The home must be your principal residence. And you must be a Canadian citizen or permanent resident in Canada. So you must have 25% equity in a home after paying all liabilities. So this is how they calculate this. I'm going to share this with you so you can have, let me put it this way. So let's say you have a house, it's $1 million. It has appraised value of $1 million. HCR is housing. This is a home equity sharing agreement. Let's say you borrow $100,000 for 10 years, and you negotiated with you, or based on appraisal, you have to pay for the appraisal, you pay for the home inspection, and you expect that the annual growth will be 2.5%. Normally it's higher, but I'm just giving an example of that. So you borrow $100,000, the HCSA will charge you $5,000 as the origination fee, and they give you $95,000. So basically you are getting $95,000, 5% of the amount of money. It can go up to $500,000. Okay, this I just set an example. So future value. So you know it's 100,000. Your rate is 2.5%, and you got it for 10 years. Sorry. So your value of the home has increased, future value to 1.285, this just calculated. So since you have borrowed, starting value of the home was $950, when they calculated the value, and you have a change of value is about $330,000. So 60% is your share in this case because you're only borrowing 100,000. So, and then you have share value will be 198,051. This is 60% of your share, and 40% will be HCRA. Now, HESRA, what they do is they calculate the factor, they time 4. So if it's 8%, they will time 4 to calculate the almost 33% of the value. I just put a number there for you. So in order to calculate a value. So now when you have, let's say you are selling a house, there is no penalty. You can break anytime you want. You can sell your house. There is no restriction from there. So you borrow 100,000, HCRA value change to 132,044. There is a closeout cost of 23,520, and you end up paying 233,354. So HE, which is called Housing Equity Share Agreement, contribution is principal. We call 100,000. So they're making 132,000 as an equity share of what they contributed toward this transaction. So they're not paying anything. It turned out to be close to 10% in my calculation, but that's why how they do it. They don't charge you any money and let you have the house. And lots of people have affordability issues, and they are probably using this down payment process. And also whoever have a house, they can have an equity sharing here, and therefore they can live in their own house without selling it. So now you can see your home equity at the end of the value of your HESA. Your value of the home before was 1 million, now is 1.28, 1,280,085. Your HESA payment is 233,354, and what you're left is equity after HCRA is 1,046,730. So basically, you gain 46,700 for that, and it's a change in your home equity about 16.3%. So this gives you a little idea. It's expensive in a way, but if you need needs to, this will be the only source. It is better than reverse mortgage if you're familiar with that. Reverse mortgage, you have to pay every month a percentage, whatever is calculation. If you don't pay that, it's cumulated toward end of the house, end of the term. And after you sell the property, you will pay principal and you pay those calculation. And it's a very expensive in terms of that. So this is me because I'm a principal broker, so I have a license. So this will end my presentation. And I'd like to know if you have any questions. Rory, you have any questions?
No, I'm good. Thank you.
And Brett, you have any question?
No, I'm good. It's just nice to have some other resources and some other options. I think that's great.
So I think you should explore that option in the United States and see if somebody is doing it. Do you not feel that so many people, they want to buy sometime, I'm talking about the foreigners, but the local people, they want to buy, they don't have enough down payment. They qualify, but they don't have down payment. Have you had that experience?
Well,
Our
we have
market,
Yes, please.
we have the down payments assistance for first-time home buyers in the States here, in Florida, I should say. We that's just for first-time home buyers, or but on the commercial side, I'm not sure. Rory might be able to speak more on that. So I'm not sure on the commercial side.
You're only talking about residential side.
Yeah. Oh, okay. Okay. Yeah. So on residential side, we do have down payment assistance programs.
For the home buyers.
Yes, for home buyers.
Is it first time or any buyer?
First time.
Okay.
Although to hear, just so you know, first time home buyer in the States, if you haven't owned a home, I think it's in 2 years, you're
3
considered a
years.
first time, 3 years.
Yeah, that's 3
You're
years.
considered a first time home buyer. So it could recycle as long as you haven't owned a home in the last 3 years.
Yeah, in Ontario and Canada, first time home buyer means he or she does not have a house anywhere in the world. They have to give a declaration with the lawyer at closing, because there are a couple of things there, because we have a CRA rebate program where the builder can get up to $24,000 and some provincial and also some federal funding. And those are only available to the first time home buyer when they're certified. And also they get a GST, HST rebate, and that's what I'm referring to. And also first time home buyer will pay a less, I believe, 4,000 on land transfer tax. So these are the things related to the first time home buyers. And it's some assistance program for them to accommodate. And this is very important to know that. So, and this is what's happening. So I before we do that, I will do a small update on real estate. Before I do that, I'm going to ask Rory to present some information, and each of you can tell me about what's going on in your area, neighborhood. If you have any program or activities that you want to share, you are most welcome to do that. Rory?
Sure. So, couple things. I know Brett and Barbara know this. So Florida had their annual convention last week in Orlando for the Florida Realtors. We're starting to see, I think, pretty much the same around the state, that days on market's going up, market's starting to stabilize. You're starting to get more buyers entering the market because they're over the two things. One, they're starting to get over the fact that they're not going to get 2 to 3% like they did a year ago.
Yeah.
And also, mortgage rates did go down slightly within the last 60 days. And they're expecting potentially another rate cut in the United States by, I think it's November, is what I heard, by the Fed. Also, along with that, prices have still slowly climbed, not as fast as they were in the last year or two, but that's starting to stabilize too. You're starting to see pricing level off a little bit, at least in Northeast Florida. Transactions are down a little bit in terms of volume, and therefore inventory is starting to increase. The builders are starting to catch up a little bit on new construction. Plus, sellers are starting to do more listings than they were holding off. I think a large impact in the States, I don't know how it'll affect Canada, but probably globally, is going to be what happens in our November elections in the national elections. So once we know president, balance of power in Congress and the Senate, those could affect rates. It's probably going to affect commerce in general throughout the U.S.
Wonderful. Thank you very much. Brett, you want to share any information from there?
No, I'm good. I just had to step out for a second. I'm in the middle of a rainstorm and had to go pick up some documents for some people.
Okay. Okay, that's good. Okay, Barbara, you want to share any other information?
The only other thing we had in Florida is well, we have the buyers brokers buyers brokers agreement that must be signed now by a buyer. The sellers no longer will be responsible for paying the buyers brokers fees, so the buyer will have to pay that fee. There are different things that we're working out where we probably will be heavy negotiation with the sellers to try to help out to make sure that these properties are sold. So we're in the process of going through a whole lot of changes on that aspect. But
Ye-
we're prepared and we will get through it.
Yeah, and Tahir, if I could just add to what Barbara said,
Sure.
it doesn't mean that sellers cannot contribute to the commission for buyers. It's just that buyers are actually going to be the party that sets that commission for their buyer's agent. And that was not always necessarily the case, particularly in Florida. I know a lot of other states already had that. We did not. You know, nationally, commissions have been taken out of all of our MLS systems. So MLS is purely now for finding inventory or listing inventory, but it's not really an exchange of financial information between agents. That's been disallowed. So yeah, it's changed. The way we do business changed a lot in mid-August. The only other thing I wanted to add in before I don't know if Brett wants to jump back in, but in the chat for anybody who's interested and also who may be watching your show, with the NAR convention coming up in Boston in November, I put the 3 days that most of the global programs are going on. So those are self-explanatory. You can look up the times, but those 3 days, November 6th, 7th, and 8th, are when the National Association of Realtors has most of their global committees and programs.
Wonderful. Thank you for sharing. That was wonderful.
Yeah, and I know that Canada is hosting a reception in Boston, and that'll be. I'll have to get the dates and time and stuff, and I'll make sure I get it posted on like our voice and some other things.
Yeah, Brett, before you came on, I mentioned to Tahir that I've been speaking with Sharon von Schoenberg from Korea, and of course they'll have a booth in the Global Pavilion. NIFAR is working on maybe getting an MOU signing with Korea in Boston in November.
Nice.
Yeah, that's wonderful, and it's good to have more information about what's going on. Just to update you, in December 1st in Ontario, we have a new law. It's called TRESA, Trust in Real Estate Services Act 2002. It replaces the REBA, Real Estate Business Broker Act, and it has set up a new protocol for how to conduct business. They have eliminated the customer service, and they have come up with a RICO information guide for residential and commercial. Very, very comprehensive guide, educating them. And also now, if a person does not want to be represented, you must have a relationship with a brokerage. So we have two types of brokerage. Broker representation, that means entire brokerage could become a multiple representation if they sign as a broker representation. That means everybody is to be responsible. Or they have a designation representation. That means they designate a person in the brokerage. Therefore, if one is buying and one is selling, they are both designated. The entire brokerage is not in a multiple representation in case of a disclosure. So they can freely work, and they need to protect the broker record, responsible to make sure the information is not shared. The client interest is protected independently, and broker record play a big role in managing both buyer and seller if they are being represented, but they are not in a multiple representation. Otherwise, you will require a disclosure. If one team has a buyer and seller represented, they are part of the team, they are in a multiple representation. Other thing we have is a self-represented party. Now, anybody who does not want to hire a realtor or real estate professional, they can self-represent themselves. However, they have to give consent and acknowledgement that you were offered, explained the RICO information guide, but you have decided not to proceed. Therefore, you acknowledge that you're going to have your independent opinion. We are not responsible for anything. Only general information that you put on MLS or open house, you share. You do not give advice, opinion, or guidance, or show a property. We cannot even show a property unless we have a brokerage agreement or designated representation. So big change what we did. And in terms of pricing, whatever type of service that they provide, they have to agree to it. So we have this in the process. We're still showing if the seller is offering cooperation, we're still showing in our MLS what is the cooperating broker commission is. And obviously we have more instruction in our BRA or listing agreement. What happens if you have to split the commission? What happens if you have multiple representation? How to handle an offers? Many, many things. And let's say if a seller is paying a commission and your commission is, let's say, 5%, the seller is only paying 2%. The buyer is going to pay 3%. They need to explain in the BRA how the payment will work. And if you're going to have, similarly, if you end up with a listing brokerage from the same company, they have to disclose multiple representation, how they're going to safeguard. The other thing is we also have a now permission, written permission from the seller to disclose the content of the offer. Now we have a responsibility as listing brokerage to tell all the buyer agent who are interested to put an offer that your content of your offer will be disclosed or not disclosed. So we have to provide the clarity to all people who are putting an offer. Obviously, personal information is not disclosed. So I did quite a few episodes on that on my realtycoffeetalk.com or YouTube Realty Coffee Talk. You can check that because I did seminars on that. I think very educational. Similarly, if you have policies changing in the United States, I think it's a good idea to extract those information and share with your brokerage or association to help them to understand, to not to infringe the law and to remain a good, responsible professional. So any general question? I think I'm going to give you a very small brief on the market condition here. And unless you want to share something, Rory?
So Tahir, I'll just follow up on what you just said, just so you're aware of Florida's rules a little bit, because a lot of the members, of course, in this group are from Florida. Florida doesn't allow multiple representation within the same firm on residential. And if you're a transaction broker, if you're a single agent, well, you can't have dual representation in Florida on residential. If you had that arrangement on commercial, you can do that under something called designated sales associates or DSAs. What you were explaining though about the disclosure part of what Toronto and Canada now has with sellers having to, if asked, disclose what they're willing to pay a buyer's agent, if anything. The buyer's agent knowing exactly what the full commission would be and signing off on that before they could see any houses is very similar to Florida, that higher level of disclosure than, like Barbara was saying, we had prior to August.
Oh, fantastic. Idea again is to not only as a professional regulator wants to protect consumer. That's the whole idea again to regulating the real estate. And ethically, professionally, all our organized real estate, Canadian Real Estate Association, Ontario Real Estate Association, Toronto Regional Real Estate Board, and other board, we all follow the ethics and we encourage people to make sure, good ethics, good business, and follow maintain your integrity, give a feel of comfort to your client that their service is worth the value they deliver. And my trademark, my company is value through service. That's my registered trademark. We provide value. And that's where our focus is, and we encourage all our real estate professionals to acquire knowledge. And our team, Rory, you have, I'm very impressed with mentorship, education, and sharing of your knowledge with everybody, with such a high credentials and achievement. And this is a very pride moment for me to have all those friends taking time to come and talk and share their knowledge and experience. And this is a guiding tool for newcomers who are joining CIPS professional or other designations to come and share and learn. This is the whole idea behind this process. So, Lori, if you don't mind, I can share the small statistic. I'm going to swing that and just give you the July report about what's going on in Canada. And if you allow me, any question, let me see, but share. Here. So I'm going to close this file. Okay, and there was a, yeah. So this was our we're going to swing by, keep moving. We already know that this is not music I added this time. All right. So everybody know about global connectivity. I'm not going to talk about it. And this is jurisdiction that I have. And this is I want to share with you. This is July report, Toronto Regional Real Estate Board. I'm a member of Toronto Regional Real Estate Board. And our detached home prices in 416 is 1.648 million. And 905 is 1.353 million. And SAMI, 1.254 million in 416 and 961,000 in 905 area. Townhome, 970,000 in 416 and 890, almost 900,000 in 905. Condo apartment, 748,000 in 416 and 658,000 in 905 area. Percentage of change, detached home, I'm going to minus, this is the average sale price here, minus 1.1%, by 905 and 0.5 plus change in 416. SAMI was minus 0.4%. in 416 and minus 4.5 in 905 area. Townhome was minus 0.9 in Toronto, 416, and minus 4.2 in 905. Condo apartment minus 0.5% and minus 5.79 in 905 area. This slide will give you more details. I'm going to move them in here. So average price sales. So let's talk about year over year summary. In 23, we have a 3.3% change. We have more sale in July as compared to 23. We have a new listing. We have 18.5% more listing as compared to 23 in July 24. Active listing, we have 55.4% more than what we have in July 24. Our average price is minus 0.9% as compared to last year to July. And also, let me go back. Sorry, you went very back. And we have average day on the market is 56.5%, taking longer to sell. List day on the market, 41.2% increase. So you can see that. And this is a historic data. This shows you calendar about 10 years price difference. You can see that 2011 was at 464,989 average house. 22, it was 1,190,740. In 23, we have a 65,884 sale, and average price, regardless of anything, was 1,126,279,000. And now you can look at this here. We are already par with the average price as compared to last year. So this is based on only 7 months. Our total sale was 41,933. Our average price is 1,127,525. And you can see there in June, we were 1,161,944. And we are now down 1,106,000. So I would say 55,000, we are down over the period. So this is a data about the same, it not changed a last presentation, Canada-wide. Same figure is already available on 41 Global Connectivity Conference. No change. This is a forecasting from Canadian Real Estate Association. You're already familiar with this process. If anybody's new, they want to learn more. All the recording of this is available on YouTube channel. Please go there and
To learn more about real estate and mortgages, please visit Realty Coffee Talk and subscribe to my YouTube channel.
So I think you're all member of Global Real Estate Professional Network I created. Thank you very much. And our next will be on 43rd Global Connectivity Conference on 26 September. It's always held on last Thursday of each month. And I hope that you like that. And I'm going to stop. Okay, and I hope that I'm able to stop that. Thank you very much. Any questions? Feel free to share. Rory, if you want to share any data from your side, we still have 5 more minutes to go.
No, I'm good. Thank you, Tahir. I'll see you at the next one.
Okay, wonderful. Brad, you have anything to say?
No, thank you very much for the presentation.
You're very welcome. Barbara, you want to say anything?
No, thank you so much for everything. And the presentation was great.
Thank you very much. It's a great honor for me to all of you to join today on our 42nd Global Connectivity Conference. We'll see you next on last Thursday of each month, September. And we will look forward to see you there. Take care. Thank you and have yourself a wonderful day. Bye for now.
Do the same.